back to this special CNBC TV18 Inside Bengaluru show. This morning call Bazaar is coming to you all the way from Bengaluru. I am in the World Trade Center building, which is in the Brigade compound. And actually, speaking of the Brigade compound, I am going to speak about real estate. I not only have Suresh Krish of Brigade Enterprises with me, I also have Mr. J.C. Sharma, almost the father of real estate here in Bengaluru. Gentlemen, thank you very much for joining me. Well, Mr. Sharma, you know, what is the overall picture for real estate? In most of the other cities, we are seeing actually prices fall. Your quarterly numbers indicate at least a flat to sometimes an occasional incline. Your big prized demand area has been the IT space. Will it continue to give you demand? Is there enough robust growth in that sector to continue to give you your EMI payers?
The big picture is the volumes have been falling as far as we are concerned, primarily on account of fall in volumes from other cities. Bangalore has been holding firm and has been showing growth as far as we are concerned and for most of the A-grade developers are concerned. This year what we have seen that in the first two quarters, that January to say June sort of a thing, even in Bangalore quarters also, especially for the products which are priced above 1 crore, 1.5 crore or so, there has been a dip in the demand, but which is being made up with the smaller units, 1,000 square feet, 1,200 square feet, two-bedroom apartments, where people are now going. So prima facie, looking at the overall economic scenario, instead of prices coming down, people are getting into the lower price ticket size products where demand continues. So overall square footage as well as volumes in Bangalore this year also should be better and it will keep growing. As far as the IT sector is concerned, earlier it used to give us 40% plus kind of a volumes. Now it is hovering around 30%. So that's where there has been a dip in the demand from this particular sector.
Well, you know, going by the kind of inflation we are seeing, even wage inflation has dipped considerably. I mean, people are reporting only single-digit compensation increases. So will your prices fall? I mean, how long will you be able to sell smaller units to your clientele? Will at some point you will be forced to price down your larger units?
I don't think so, because if you look at basically there are three components for pricing the product. One is the land price, where you don't find that prices can ever come down as it looks like.
The construction cost should come down?
Construction cost of late, the steel prices, they have come down reasonably well. So you are getting now steel at 40,000 or below.
Labor and cement?
Labor has gone up, and cement in south especially, it's much higher priced than what you see in the north or in the western market. But the labor cost continues to keep rising. The approval cost continues to keep rising, and the time frame, what it takes to get the approvals, it also keeps going up. So you don't see as such that the developers in Bangalore are enjoying the kind of margins what you see from the Mumbai developers like Oberoi and others. So I don't think from that angle there is a pressure for developers to reduce. But of course, when you find the demand getting compressed, then some of them may resort to some kind of a discount sales.
Well, Mr. Krish, thank you very much first for hosting us in the Brigade compound and in this wonderful lounge. It's been a pleasure. And this Bangalore skyline is really very compelling. I don't want to look at the stock price sticker. I want to look more around me. But coming to the financial part itself, would you endorse what Mr. Sharma is saying? Are you seeing also this consumer downtrading, if you please? Volume growth, but in smaller size units.
Volume growth can be justified based on the commercial demand normally. Earlier, I would say last year, we had about 14 million square feet for the absorption in Bengaluru, which is the highest in the world. Even when you have about 5 multiplier effect, then the total demand for the RESI could be around 70 million square feet. This year, people are predicting around 17 million square feet, 17 million square feet of commercial space. That means around 85 million square feet of residential demand is there. So obviously, about 15-20% growth, that is for residential, is also there. whereas the reported figure is only from the organized players. Okay, maybe from top 10 players in Bangalore like this. So and now we have the developers from other states also where you do not have demand, like Bombay, Delhi or Hyderabad, Chennai like this. People are also coming to Bangalore for their development. Obviously what will happen, the pie where we have enjoyed about 50% or something may drop to 40%, whereas the individual score onto that will obviously increase.
Yes, Godrej Properties, I think, announced commercial realization of one of their projects.
Exactly. So when you see the demand for Bengaluru, yes, it is increasing. But how much pie you wanted to go on share depends on the what segment you are. When you are in the high segment growth, obviously, there is, as Mr. Sharma says, I think there could be some kind of dip. When you are into the mid-market, then the, I think, increase in demand, and you cannot expect so much of price increase per annum. Reasonably, it could be around 10 to 12% increase per annum. Definitely, we are expecting. Right.
Well, actually, the expert on this issue is Sonia. She is aching to join you from our Bombay studio, and she'll come to you from there. Sonia.
Well, thanks, Lata, for that. Mr. Sharma, Mr. Chris, good morning, and thank you once again for joining us on the show. Mr. Chris, I wanted to ask you about, you were talking about how demand may still be there in the Bangalore market, but what about supply issues? Because, for example, a market like India, like Bombay, there is years worth of unsold inventory which is lying in the Bombay market, and we're facing huge supply issues. What about Bangalore itself? What is the situation there?
In fact, just now I have actually answered your question, because earlier we had only the Bangalore players. Because you have additional players from other cities, obviously the supply side is increasing, whereas demand is there. Okay, basically demand is based on the commercial as well as the migration demand. So we have demand, but that could be an oversupply because of participation by other developers from other states.
Okay, so if
obviously there is an increase in supply of the stocks. No, definitely you can say.
The reason I asked is because, if you map the, say, the RBI housing price index, that has come out with a report where they suggest that the prices pan-India have moderated to quite a large extent, almost 7 to about 20% pan-India across Tier 1 and Tier 2 cities. So for Bangalore specifically, say in the next 3 to 6 months, what kind of price trajectory do you expect, given the kind of oversupply situation?
Okay, one is oversupply. Because of supply, you cannot go and reduce the price because people cannot go and sell at loss. Obviously, again, based on the inflation plus some factors for the increase in the growth, people used to have about 10 to 12%. I am not talking only about the top 10 players in Bangalore, not about the other unorganized players. About 10 to 12% price increase definitely be there to again take care of the inflation as well as any other unforeseen contingencies like that. Definitely it will be there. 10 to 12% may be there the price increase.
Okay, Mr. Sharma, would you concur with that view that a 10 to 12% price increase looks likely for the Bangalore market?
See, Sonia, you have raised two questions. One about the likelihood of prices coming down or not, or whether you have a problem about the unsold inventory. See, as far as the unsold inventory issue is concerned, in the whole of southern market, which probably today constitute more than 2/3 of India's volumes in the Tier 1 cities, you have less than 1/3 of the inventory. Now, when we look at the inventory part also, you need to see that last quarter I started a project with close to 7,000 units. So the launch was with 7,000 units, and most of the guys will consider that as an inventory for Sobha. But we are doing it in a phase-wise, where we would have started with only 2,000 units first, and we have sold a significant portion of that. Remaining is not available, and it is a to-be-sold inventory. So one has to look at that today developers are launching bigger projects, larger projects, so there will be an issue of inventory, but whether they carry the finished stock inventory or not. In our view, right, when we are going to deliver this year 4 million square feet plus of residential space, there may not be 100,000 square feet of finished stock inventory we will be carrying. So we don't have to worry about that, and this applies for most of the A-grade developers. As far as coming to the prices, In Bangalore still you get products between 4,500 to 5,500, almost 90% of the total inventory. At that price point, I don't see that prices can come down. Volumes may come down maybe due to the economic reasons, but for a developer to sustain itself at these prices itself is extremely difficult. It may not go up double digit, but it will not come down at least under all circumstances, and likely to keep going up maybe 1.5 to 2% on a quarterly basis.
Yep. Okay. Mr. Sharma, just some winding up observations. What is your observation on the real estate market? I mean, you operate in a whole host of other markets, and you have been giving us a comparative feel. Do you think there is a lot more softness left in, say, Delhi? What is the impression you're getting, or Hyderabad for that matter, or Bombay? Places where you operate and places where you don't operate, you will still be better placed to tell us. Is there more dips to come before things jump up there?
You are right. See, except Mumbai, we are there in almost all the bigger cities. Whatever experience we are going through, we clearly see that in Chennai, the demand is coming back. What we find in NCR, in Mumbai I am not an expert, so it will be unwise for me to comment upon. But yes, the common sense says if you have the kind of prices prevailing there, where white-collar employees are not very many, this kind of a situation probably was inevitable. But coming back to NCR, I think the structure itself was so bad because almost all the new launches, it will be the broker investors nexus. They used to pick up the stocks and they always wanted exit at a higher price. Indians do not know how to cut their losses, and that problem continues up to the last point.
But there is no such problem in other cities.
And the developers also have defaulted or delayed their projects. So it has magnified the whole problem. Somewhere some structural reforms are required, how they can be funded so that customers don't lose their money. And like it has happened in case of Bangalore with couple of developers, where NBFCs at the right time, they have interfered and the projects are back on track. Something like this needs to be done with equity capital. Hopefully things will become better.
But there's over-investment and over-speculative element you don't see in other cities?
No. Except Delhi.
NCR. All right. It's a pleasure speaking with you, Mr. Suresh Krish. Once again, thank you very much for hosting us in the Brigade Ultra Lounge and giving us this beautiful view of Bangalore that you see in and around me. But our real estate dogged analyst, Sonia, has one more question. Go ahead, Sonia.
No, well, I just wanted to wrap this conversation up with one view from Mr. Sharma on the realizations, because I heard him mention a while